Big number expected today. We've had some significant upgrades since the ADP number on Wednesday and the weekly claims number yesterday. Actually, let me show my screen. Some charts. Now we share the charts. There we go. Actually, let's my ugly mug for a little bit. So, as I say, ADP number on Wednesday missed by about 100,000. Claims was under 500,000 for the first time. We got a new post-pandemic low on yesterday. 494,000, fell by 93,000. The only issue remains the continuing claims still holds up. And it's counter trend. It's actually going up rather than going down. But see what today brings. I say big numbers. We got Jeffries top of the shop with a 2.1 million new jobs expected. They are also expected unemployment to fall to 5.8%. At the other end of the scale, we've got Oxford Economics, who are looking for about 775,000. So there we go. Datrasang, good evening. Hope you're well. Hope you're staying safe. Ebony, good morning to you. Two extremes of the world. So good morning, good evening to you all. As usual with these sessions, stick in anything you want to have a look at chart-wise. Let's get rid of my ugly mug then a bit and bring up the chart. So this is Euro on the 15-minute chart. Dipped down in the last few minutes, down from the 120.88 area. So if we got the daily time frame actually on here, it's a bit messy, but you see we've had a strong, very strong day yesterday for Euro, back over the 20-day moving average, and we're down today, but 121 on the horizon, possibly still. And let's go back to the 15 minutes. So there we are, R1 120.92. Pivot point down there at 120.43 for the Euro as the numbers come in. Good afternoon, good evening, good afternoon to you all. Well, say 8 minutes to go to the big number. Consensus earlier in the week was around about 900,000, 880,000. That's been upgraded by nearly a whole 100,000 to about 980,000 as well. So good afternoon, everybody. Ebony, we'll get to dollar CAD. Let's just make a note of that. We'll get to dollar Aussie CAD. Both commodity currencies, both doing very well. Commodities remain on a tear. Copper's at near 10-year high. Oil's doing very well, or had been doing very well this week. Here's the oil chart for the daily time frame. So very strong midweek here. We went to 66.65 on the US dollar for the US oil. Down since then, but we're still holding $64 a barrel. We'll come to that in a bit more detail, Ebony, later on. Don't worry. Euro Swiss, says Justin. Euro Swiss, says Justine. Fine, I don't know what you mean, my friend. Good afternoon, Mustafa. Hope you're well. Leroy, good afternoon. What up, bro? I don't know if you talking to me or are you talking to everyone? Hi, CP. Let me see if there's any Facebook questions as well. Just because the Facebook questions don't pop up here, so let me watch that live. There's no questions, just getting spammed. Ragnar, hello. Cassandra, hello. And hello, guys. All right, let's just close that one down. And close that one down, can't it? Yeah, there we go. So just close that. Have a look at that. And lots of you in here on Facebook. Good afternoon, everybody. Right, NFP, biggest target of the month. Obviously, I say big numbers expected. This is the oil chart going down today. We've also got let's have a look. What else? That was dollar CAD. Let's just go through all these questions. Justine's asking about Euro Swiss. One of those pairs, Justice. Sort of slide sideways, very key, obviously key, important currency. We'll have a look at that later as well. Pound, certainly. Bill, we'll have a look at CAD yen as well. CAD yen. Let's just wait till the numbers come out, guys, in the next 5 minutes or so, and we'll analyse that, because it all will really hinge around. There's big expectations regarding the NFP number today. I say it's been upgraded quite significantly. So, Carlos, as you say, who knows, up or down? We'll find out in a minute. If we look at the, if I bring the Euro chart back on, there it is. So you can't see it now, can you? It's only my ugly mug. It's sort of been slipping. This is the 15-minute on the euro-dollar chart. Actually, let's make that wee bit bigger and bring me back. Minimize me. There we are. That's better. That's better. So we'll see. CAD yen as well. We'll have a look at that. That's not a problem. Gold has a line go as well. We'll have a look at gold. So a lot of you, I'm surprised, been a bit late for gold, but gold again is on a bit of a spin. Let's have a quick look at gold before the numbers come out. Gold here. This is gold on the 1 hour chart. Big rally yesterday. We breached the key 1800. But for me, it was really the end of day basis. We got through 1796 on gold, which is a key 200-day moving average. And we're over that now. I can't hear myself for some reason on some of the other broadcasts. So let me just mute myself on here, which is a bit strange, isn't it? There we are. I can hear myself in stereo. In fact, it was like quadrophone sound by the sound of things. So Carlos, yeah, we'll see. Carlos, as far as gold's concerned, let's see, gold rallied to 1820 this morning, still holding that at the moment, still got its bid. Sterling, lots of local elections and a big by-election win for the Prime Minister in the United Kingdom today. So sterling's sort of rotating through 139 after all that excitement yesterday around the sort of very, very strange announcements you can see here. From the Bank of England, where they didn't talk about taper, but then it was actually in the announcement that was about a minute late from the major news announcements as well. We also had the chief economist voting to cut the QE program in the UK yesterday. So more or less tapering is sort of on the cards for sterling. So sterling may accrue from here, but at the moment we continue to pivot through 139. We're under 138. We're under the pivot point at the moment ahead of the NFP numbers. So the other key thing that's happening today as well, don't forget guys, is dollar CAD. Dollar CAD went down to a new 38-month low yesterday as the commodity currencies continue to get a bid. CAD is the best performing of the major currencies this year so far. And this receiving a bid, obviously CAD, particularly attuned to the oil market. Oil's had a very good run, so CAD very much in demand, and they've got their jobs numbers as well at the same time as the American jobs numbers. So sometimes we get some very significant moves here on dollar CAD when the jobs numbers come out. We're 2 minutes away from the announcement or the numbers getting broken by the Bureau of Labour Statistics. As I said, another key thing to watch is that long term, the U6, the much wider measure of unemployment. The U6 measures, that's still sitting at 10.7% from last month. See what that comes back under the key 10% level this month. Participation rate as well. See if there's more people coming back into the market, the jobs market. But we'll see. There's still this issue. You remember from the claims numbers yesterday, although it's very significant, the private payrolls, as I say, missed by nearly 100,000. The ADP numbers on Wednesday. What type of vacancies are still available? 8 million still long-term unemployed. And again, the weekly claims yesterday showed that the continuing claims actually went up rather than went down. So we'll see where we go from here and what a key event this could be, pivotal. Interestingly, we've also got a key speech by President Biden later on today as well. So it's not scheduled to talk about the economy as such, but obviously if the NFP number is fairly positive or indeed fairly negative, it may elicit some comments from the president. So as I say, a quick recap, consensus for NFP is now up to 980,000. So 1 million is very much on the cards. Top of the list is Jeffries with a 2.1 million breach or 2.1 million new jobs. And bottom of the pile is Oxford Economics at 775,000, but they were down at 550,000 earlier in the week. So again, they've had quite a significant upgrade, right? The numbers obviously come out. This is dollar CAD here falling as the numbers start across the terminals. So let's have a quick recap. So it's a massive, massive miss, ladies and gentlemen. I don't know what's gone on there. 266,000. We've had a huge miss for the headline NFP number. Interestingly, though, earnings is up. Earnings are up significantly. So wages are sticking up. This will add to the idea about inflation perhaps being a bit less than just transient and maybe a bit more sticky. Average hourly earnings for April on a month-on-month basis up 0.7 of 1%. On an annualized basis up 0.3%. That's a big leap. It was expecting to be that was expected to be negative. Obviously, we had a big 4.2% last month, but big miss, 265,000. So all the estimates off the park. I've just got the headlines here. I've got no details of why that is in there, but that's a huge miss. We'd expect dollar to come under pressure from that. That's a big miss. 266,000 for the headline. And also a negative one for the Canadian. The Canadian jobs data has also come in at 207,000. So dollar CAD starting to move back down here in the 15 minutes. Obviously, got the euros doing in the dollar index, and we'll come to those requests in a minute, ladies and gentlemen. So which is going down. Well, dollar's going down. As I've said, he was offsetting it up. But let's have a look. Dollar will continue to sink, you'll imagine, on that. Euro spiking here. This is the 15 minutes. So euro breached that 121. Cable will be, one would guess, will be back over 139. Indeed, it has. Cable's ratcheting up here. And dollar yen, big sink under 109. So 109's been breached for dollar yen. 121 being breached for euro. And 139 being re-breached for sterling here, cable here. The Aussie, I would guess, was back to perhaps test. Is Aussie? Yeah, Aussie back. Oh, this is the Aussie dollar back over 78. And Kiwi, let's just run through them all while we've got them here. Kiwi back to test 72.50. So it's a dollar negative is the immediate response from the headline. Let's have a look at the details a wee bit more again. So participation rate is more or less flat at 61.7%. Youth sticks unemployment remains over 10%, so that's relatively negative as well. And an unemployment rate has ticked up, so a big surprise to the downside for Jobs Day, May the 7th, 2021. 266,000 new jobs. It was expected, bias to the upside, a million plus, 880,000 earlier in the week. It'd been upgraded to 980,000. We've had a big miss. Remember last month we had that big beat where we came in at 916,000 compared to 650,000. Well, last month now has been revised down near 100,000 as well, from 916,000 down over 140,000 to 770,000. So a big decline, revision of last month's data as well. So things perhaps aren't as spiky or as positive in the United States as it was, as we were being led to believe from the data. Equity markets have shrugged that off. This is the USA 100. So a weaker dollar helps equities. Might question some of the risk factor, but we're still at 4,212, sort of airing to the upside at the moment. First resistance on the S&P 500 is 4,222. So there we go. Big surprise for NFP. So let's have a look at some of those requests you put in earlier. Aussie CAD, Euro Swiss, CAD Yen, and gold. Let's start with gold because it's the one I've got here. How's gold react? Well, gold continues to run to the upside. Someone's just commented on here. Data is manipulated garbage. Well, maybe, but it's what's gone. It's what's gone in, my friend. Over the key 1820, gold continues to accrue 1835. Remember, above R1 here for gold. This is 1 hour chart for gold. Continues to bid. It's been over. It's it triggered here on this strategy here north earlier yesterday afternoon. In fact, this was Wednesday afternoon. It's been long ever since, continuing to accrue. Steady. Yeah, that's stayed in the 9-period EMA, kept you in that, and you're very well in the money on that 1 hour crossing strategy there for gold, which continues to move over. Tech's asking, why dollar getting more weak? USD CAD is selling. It's because, the CAD data was weak as well, but we're at multi-year lows here. We're at 38-month lows down here for dollar CAD. Tech, my friend, and when trends start to run, they run and stay in place for a while before they turn around. It's the daily time frame for dollar CAD, as you can see, moving down. I don't know what time frame you're trading it on, but that continues to move to the downside on a bit of a better day today. Big sell-off yesterday. The Canadian data, again, wasn't great. In fact, it was a big miss. Let's run through the Canadian data as well. Canadian data, the fall in employment was expected around 175,000. It was worse than that. It came in at 207,000. Remember, again, it was a big positive number last month, 303,000. Again, participation rate remains flat at 64.9%. And unemployment rate in Canada has also ticked up to 8.1%. So the stuttering recovery is the argument for the stuttering recovery is contained in this data today as well at the moment for the North American continent. Well, certainly the two biggest countries in the North American continent, Canada and the United States. So yeah, a bit of a miss there. Let's have a look. Why have I still got? Why is that still on? Let's have a look. Why is there no questions in here? Let's refresh that. Let's have a look for Facebook questions. Somebody's helping. Right, I've got some more Facebook questions here. Let's just bear with me. Good afternoon to you. Hope you're well. I'm good. Good to see you again as well. Somebody's asking for some help. I'm sure Ryan could do that. Accept keys. Help those spam. Some spam. All spam on Facebook. Never mind. Right, let's have a look at some of these questions that you asked about, guys. So, right, let's go through some of these charts. Okay, on the back of the NFP being a big miss. All right, let's start with the backwards. First question: is it good to buy gold? I don't know if you're talking about. I can't tell you what to do, Taksunda, my friend. I'm not allowed to. But as far as the trend following strategy is concerned, this one here on the 1 hour chart has been long since, I say, on Wednesday afternoon. It continues to move up. The daily time frame is the one that always interests me. Here for April, we kept above the 20-day moving average. We broke again on this end of day strategy here at the beginning of April. It's been over the 20-day moving average. We had another big day here in the middle of April. We ran up and we tested the 200-day moving average for 5 days. So 1, 2, 3, 4, 5, and then finally on the 6th day we broke through, and we broke through significantly yesterday. Through the 200-day moving average here at 1796, through the big round number 1800, a big strong day yesterday, and we're having a strong day today. Obviously, it's far from over today, but it's still looking at a relatively positive candle. Harvest is saying here, I love NFP this month in euro dollar, no shadow, and it's bullish so fast makes me profit. There we go. Remember, a profit can then disappear as quickly as it appears, so be careful, whatever asset you're trading. But euro, here we are, 121 being breached. Let's go back to the 1 hour time frame. Big 1 hour candle here. So it's a weak dollar on a big miss for NFP for May. Big surprise. Again, I haven't got any details on this workstation to actually drill down into what is the story behind that, but we'll find out. And I'm sure we'll be writing some analysis for later in the day. But let's run through those requests that you had earlier. Let's have a look. So who was first up? It was Paul. As you can see, it's been negative. So Ebony was first up with AUDCAD. So let's have a look at AUDCAD for Ebony. I hope you're still here. So let's have a look. Again, this is probably CAD would take a bit of a whack against other currencies because the Canadian jobs data was weak, Ebony. But let's have a look. Aussie CAD. This is the daily. It's been moving down. It's moving down, and we had a new low yesterday here the day, but it's recovered today. I don't know what time frame you're trading this one on, Ebony, but that trend remains to the downside. It's under the .96 level. This is the end of day basis. So we've got the 50-day, the 20-day, and the 200-day. So we're under the 200-day for 1, 2, 3, 4, 5, 6, 7th day. Maybe a bit of a turnaround. We may have found support at 94.55. It's a bit too early to tell at the moment. But certainly today and yesterday, that tested that low. So that is probably looks like that's our low end. We've got a bit of an engulfing candle forming here for the day. So we need to get back, if this is going to move back up, we need to get back to the 200-day moving average up there at 95.75 and then back over 96 itself. I don't know if you're short or long, but that's finding some support on the daily at 94.55. The 4-hour time frame, again, that was that test there at the end of March. Tested the 20-day, couldn't get over it. Tested the 20 period, couldn't get over it. And at the moment, the 4-hour candle, which is due to close in 20 minutes, Ebony, it looks fairly spiky. The Aussie coming up against the weaker CAD because of the jobs data. But again, it need to break that. See how the top of the Bollinger Band and the 50 period moving average sits there at 95.25. So that's really where you want to break for that. But that's looking quite a positive candle thus far, and that's your support down there at 94.55, the daily on the 4-hour. Okay, where did I get to? It was Ebony first, wasn't it? Next one was somebody asked about Dr. Sand. What's this? Pound Swiss and dollar Swiss. So let's have a look at. Again, that should be fairly positive for the pound today. And your first one was the dollar. So let's just go back to the dollar. Yeah, big miss. Unemployment up at 6.1%. What we were looking at, Swissy for Dachshund. Swissy here, this is pounds, dollar Swiss. Continues to move down, as you might expect. 91.50 was our sort of resistance area earlier in the week. We broke 91 yesterday on the weaker dollar, and it continues to weaken. We're under 90.34, which is on there for a reason. I don't know why in this 1-hour time frame, but there will be a reason why that's on there. It goes way off the chart there. It's at a daily support level. It was indeed 94, goes all the way back to this resistance back here at the end of February, data percent. So again, dollar weak against the Swiss franc. Again, I'm saying again. I don't know what time frame you trade. I think you're a 4-hour trade, aren't you? But again, that triggered short trend-wise. Is it broken down? Where's that? That's the 6th. That was yesterday. As we were still sideways, really. 91.55 was our floor. 91 itself was the support. But that was a big suggestion that we were moving lower, and it continued to unwind, and that continues to trend lower. As far as pound Swiss is concerned, they might be cancelling each other out because sterling, last time I had a look, was having a relatively good day on the good political news for the Conservatives. But again, end of day basis, that remains weak. It's under its 20-day moving average. It's under its 50-day moving average. Having tested up to it yesterday, that was really interesting. Well, look at that, rounded. That's a weak one. That's moving down. So Swiss in demand, interestingly. Bit of a pinch point there on the. See how we got that pinch there and a bit more volatility. We had a pinch there. We rallied up. Pinch here. We could be moving further down. So 125.80 for pound Swiss. The next big support is that 200. This is the 200-day moving average, which is under 124. So 124 for support on the end of day basis. 30% on pound Swiss. And the key 50-day moving average there at 126.88 were breached lower. But as I said, we've been pivoting around that for a while, but we're now down to the downside after yesterday's self. So see where we go from here. But that, again, that continues to move lower. 4-hour triggered low, having triggered high there into the 200 period. Bounced off that. That's a big negative candle yesterday. Not yesterday. In fact, that was this morning, wasn't it? 8 o'clock this morning, moving lower. Okay, so that's also lower. Talk about NFP. John, we just talked about that was a big miss. Justice, you're asking about Euro Swiss, so let's have a look at Euro Swiss. Go back to those other files again, guys. When you put your query requests in here, put the time frames in you're interested in, but otherwise I'll default to the daily time frame as usual. Let's have a look. Anything. Even though US jobs data came short of expectations, what are the positive takeaways from the report? It's a great question, Adio. Positive takeaways. Well, clearly it might be good for equity markets simply because of a weaker dollar. It also suggests that the doves on the Fed and other central banks might have a point. It is too early perhaps to take off the accommodative policies. Remember, we had that surprise from the Canadian Central Bank last month. We had a talk of tapering from the Bank of England yesterday in that messy announcement. Yeah, that's really the positives really for the equity markets. And a weaker dollar also gives a big ramp up. So if you're looking for positives, a weaker dollar will move into the rally we've seen in the equity markets. And just as an example of that, BO, here we are, gold at 1837. From earlier on in the day. That's today, isn't it? What we're talking about. Earlier on today, big move up here from pivot point through R1 and testing R2 there. So copper's a big mover. Palladium's been a big mover. All the commodities very much in bid. So where was I? I was asking Justice. We were looking for Euro Swiss, weren't we? So Justice, my friend. Let's have a look at Euro Swiss. Euro Swiss. Where's it going? Euro Swiss. Euro. Here it is. Euro Swiss. Let's go back to the daily because you haven't put a time on there, Justice. But Euro Swiss. Sort of heading to the downside. It's been below its 20-day moving average for most of April. It was above it and below it. Had a big rally for February and March. Below it for most of April, and then we had a big sink into the end of the end of April, and we continue to decline. So that's been short on this crossing trending strategy there since the 28th of April. Justice doesn't seem to have found any floor at the moment. Because it went down this week. It went down again Tuesday, Wednesday, Thursday. It's bounced a wee bit today. So today we got support at 109.42. Bottom of the Bollinger Band is S1. So S1's providing support today. If we zoom up in, I don't know what time frame you're trading it, but again, that's been, so the daily is short. The 4 hour remains short as well, remains under its 20 period moving average, but we've got a big candle, previous candle. The new candle that started, that's about to close in 10 minutes, also can't close above the 20-day moving average. And that means the 5 and the 9 moving averages here are still not crossed. So it's still relatively negative. So it's negative daily, negative 4 hour, and the 1 hour may have turned around. Yeah, the 1 hour is big cross there, but it's ran out of steam and it's turning back down. So the 1 hour has got clear resistance there at 109.74. And support really down at the pivot point there at 109.50. Huge current hour, big movement here on the NFP hour for Euro Swiss traders. I don't know what time frame you're trading it. Bill is next with CAD Yen. CAD Yen again. See if the CAD's had a really good run. Weakened a wee bit this week with some. Weakness in the oil market in that weak Canadian data. If you just joined us, the weak NFP, big miss at 266,000, but also the Canadian jobs report also missed, expected to lose about 175,000 jobs this month. And in fact, there's over 203,000 jobs lost in the Canadian economy this week. So first bit of bad news for Canada for a long time. But CAD Yen, again on this strategy here, over 88 earlier. Sorry, as we got towards the end of April, having gone sideways for most of the second half of March and most of April, we were sort of supported by the 50 period. Nice move there. So that's gone long off the 50-day moving average here on the 26th of April. So it remains bid on the daily time frame. We've ran through 88. We've gone through 90 itself. So I'll just put 90 on there. You see that 90 is provided the next resistance level there. Let's just put that on there. As you can see, if I put that 90 for you guys, that's just, excuse me. Close. So there we are. 90 is the next big resistance for dollar CAD Yen. If we zoom this up now, daily. So it's had a strong end of April. Good start to May. To the upside, big line in the sand is 90. Couldn't get there yesterday. Yesterday's our resistance now where we opened this morning at 89.79. So 89.80 is the resistance. Let's change that on to so it doesn't look as thick. Change it to that. Change it to that. That's our 89. That's our resistance on the daily time frame close. So the 4 hour will still look relatively well bid. Yeah, bounced into that over its 20 and down. That's looking to go short and back into the other side of the Bollinger Band there. Stochastic's already rolled over. MACD still very positive though here on the 4 hour, and the 1 hour on the CAD yen. Nice rally up yesterday. That's our high there, that 89.80 level. Tested it again this morning. Now come and move down, and then that's gone short into the other side of the Bollinger Band from this morning at 10 o'clock, and a big move down here as the CAD data has disappointed significantly. Okay. Mohammed, pound cable, again, we saw earlier it was way back over 139. It's been pivoting through 139. Key political day in the UK as well. It's not just the American jobs numbers, the local elections, lots and lots of elections, and the news coming through from Scotland, Wales, Northern Ireland, not until Monday, but sorry, there's no elections in Northern Ireland, ignore me. But certainly Sterling had a good NFP day, if you like. Cable has bounced right off the pivot point, which was under 139. We've been pivoting through 139 most of the week. If I go to the, let's say the 4 hour, pivoting through 139 here most of the week. In fact, that takes us back to the middle of April. So you see it's been a key area. But 4 hour traders, again, long. 1 hour traders, long. From earlier in the day, bit of a, then we came back down to test, and then the NFP itself has been very positive. So big rise, that's continuing. Looks like we've ran out of steam at R2 at 139.78. And see where we go. So yeah, big surprise. How can Wall Street have got that so wrong, you would ask yourself, yeah? Well, it just shows the professionals also get things wrong. Remember, we had this consensus, this massive number. Lots of gossip this morning, whisper on the workstations of 1 million. Easy thing to say, wasn't it, when we were consensus has moved up 100,000, 980,000. But the writing was a little bit on the wall there with that mixed data we had yesterday from the weekly claims, where the continuing claims and the 4 week average continued. The 4 week average sort of continued to decline, but the continuing claims actually rose, didn't come down, they rose. They dipped and beat expectations, but the continuing claims were worse than expected as they got positive. So these things happen. It's just another data point. It's a very significant data point. Obviously, the non-farm payroll, but it is just another data point in the whole scheme of things. We'll see if there could be some massive sort of rebalancing next month. So it makes the June number even more interesting, shall we say. Have we got ahead of ourselves? Remember, I always say as well, and I've said it's always the case, markets tend to get ahead of themselves. So this reflation trade it looks like it's all priced in now. This massive stimulus that's coming from the new infrastructure bill in the United States. Again, is that all priced in now? Is there a real sign of inflation? There's been more commentary this week from some key members of the Fed, Kaplan and Mester. Al Arian, a very well-respected Egyptian-American economist at Allianz, talking about it's not transitory, this inflation. It is going to be sticky. It is going to hang around a while. Maybe that risk is there. And the jobs, is this a hiccup? Or is it the end of the trend, end of this first phase of recovery in the United States? We shall see. The issue, again, you could argue in the United States is, they've started opening up, but there's a very strong resistance to the vaccination rollout as well in the United States. A lot of people don't want to get vaccinated for various reasons. And obviously, it's a global pandemic, it's a global issue. So the horrible scenes we're seeing in India and Brazil and other parts of Latin America and other parts of Asia as the thing mutates, as more and more people catch the first derivative of it. It needs addressing quite aggressively. Vaccinations, as I say, done quite well in places like, they always hold up places like Israel and the United Kingdom and the United States. But a country that was doing very, very well, for instance, was was Chile, but they've, from a vaccination point of view, but they've been hit by this second wave in Latin America as well. So their infection has spiked back up very aggressively. We had big spikes in key countries like Germany and Japan and France as well, all trying to come out of lockdown for their summer seasons, their summer times. But yeah, it's a big issue and it still needs to be addressed properly. Where we go? Where have I gone? There we go. So anyway, Mohammed, yeah, cable still well bid. Let's have a look. What's gold? We looked at gold earlier, Lucas. Sorry, not Lucas. Haran. We're going to have a look at it again now. See if anything has changed since the NFP. Hasn't it continued to rally? So again, big move up into R2 already. 1840, not surprising. But say yesterday was the key day for gold bulls. We broke the 200-day moving average and we're over it significantly. Get it, just ride it. It continues to move up. 4 hour, nice. That's a bit more of a smoother trend, isn't it? So we're long here, out there, long again here. Big move here earlier today. Yesterday, this is into close over the key 1800. And the end of day basis, as I say, the key was this 200 level, 200 period moving average, which we rejected for 5 days, 1, 2, 3, 4, 5. And then yesterday, the 6th day, we tested it and closed very, very positively through it. So lots of buys. And then the day basis, no doubt, yesterday spurred it on today. The week NFP has added to that. So 1850 is now the next line in the sand, the next big round number for gold bulls, my friend, on an end of day basis. That also goes for Carlos. There's the gold. Gabriel, I hope you saw the cable talk. We were talking about it. I'm afraid you've probably been stopped out if you're hoping dollar to go up, because that's gone down quite aggressively. Doge Father, we talked about that before. Tech, didn't we, about why is dollar CAD selling? Well, it's because the relative terms, it's in a big downtrend. So there we go. Harvey saying he loves NFP. Take a look at dollar CAD. We've had a look at dollar CAD. In fact, let's have a look at, go back to this as well. So both these countries, dollar CAD had both had weak jobs numbers that's just come out, but dollar CAD here on the daily basis, it remains very, very weak. And as I said this morning, we're here at a 38-week low. This is all the way back to September this month here. This is May 2021. This takes us all the way back to here, September 2017. So big low here. 43. That's a 43-month low, isn't it? Where's that one? Yeah, we've gone even lower, haven't we, today? So there we are, September 2017. So 38 months low for USD CAD. So if you come back to the 1 hour chart, the intraday basis, it's been weak. Yesterday we bounced off a wee bit, but it still remains tracking lower. It looks like it's trying to move up, but it's a very weak move before the data, and they're cancelling each other out because they've both had bad lots of data. Remember, also we still got there's no Canadian data, isn't there, today? It's the the PMI data from Canada as well in about an hour's time. But again, unemployment ticked up there as well, and we've got this surprise announcement from right. There's no more questions here on Facebook as far as I can see. Let me just refresh that if you don't mind, chaps. Yeah, no, there's nobody more on Facebook. That's interesting, isn't it? Very few questions on Facebook, so we're all on YouTube today, are we, guys? Abiola Anti, please can you explain the movement of dollar CAD at the moment? Certainly, my friend. I don't know if you. There's lots of questions here. Doge Father, right? Somebody good to buy gold. I love NFP. Look at dollar CAD. Deep in profit on gold, and Barry, deep in profit on gold and euro. Well done, my friend. Don't get too greedy, though, obviously. Again, can't tell you what to do, my friend, but that's a nice comment. Follow the trends, Barry. And that's good. I don't know how you're trading it, what time frame, I'd love to know. What strategy you're using, I'd love to know. But yeah, Don't get. The other thing is don't get scared out. If you're using a trailing stop on this particular strategy here, this is gold on the end of day basis, Barry and other gold traders. It's a trend following strategy, so it would have taken you out here as it's gone back under the 9 period, but you'd have gone back in here on the 1st of May. The big engulfing candle here at the 200 period moving now. It's gone back against you, but your stop loss is still down here. Or even down here on that, and you're trailing up now. So your stop loss now, really, you could have it just under. I'd have it here. Yesterday's, in fact, knowing me, I'd have had it back down here at 1780. Just trail it up. Strong day today. Don't get too panicked. Obviously, we're over the 200-day moving average. It's key EMA. So off we go. And same with the euro, Barry. I'm sure you're well into profit, and congratulations, and trade it carefully. Very good. JM, look at JPN 225. I certainly will, my friend. It's not one I look at all the time. It's a very, very key equity market. China, as we all know, is the world's second biggest economy, and it's growing very quickly, and it will be the world's biggest economy in our lifetimes, no doubt about that. But Tokyo still holds the mantle as the key Asian finance center. Yes, we've got significant things going on in Hong Kong, Singapore, and Shanghai over the last 20 years, but Tokyo still remains the key financial center for Asia, and that's with all due respect to those other cities, and obviously to Melbourne and Sydney and Wellington as well. But Tokyo remains key, and the Japanese 225 remains a very, very significant equity market. And I'm talking because I thought I had it down here, and I probably haven't. Let's have a look at it. Let's have a look at it on different setups. So index charts. Key thing about the 225 as well, remember, the Nikkei, is that it's the leading one. It's it's the first one out of the bullocks on a Monday morning. So following what happens on Friday and the close in the US. So JP 225 being a bit of a sideways action. This is the daily time frame. Bit of a sideways action so far. So that's but we've got that moving on. Let's put some indicators on here. Let me just see where we are as far as end of month comes. Not sure period separates. So what's this telling me? Well, there's a bit of a triangle there, isn't there, on this daily, going all the way back here to the February high. That would have been sort of through there, but it's a bit higher now. We're up there, so that's that. The other thing is this low here that's sort of going a bit messy, but it's not great. That's our recent low. So we've got a bit of a wedge sort of moving lower. We tested this lower line, However, yesterday was the key day. Again, we're back over the 50-day moving average. I haven't been under it for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Tested it once, twice, 3, 4, 5, 6, 7, 8 times. Broke through it here on that 12th day. So that's turned positive yesterday. But really, it needs to get back. First target would be really back to this resistance through here. Here at the beginning of April, the middle of March sort of high here at 29,800, so call it 29,900 is your first resistance. But that's sort of ticking up and see how we've closed the day out. Bit of a strong day yesterday and on Wednesday, 5, 6, 7. Yeah, so that's Thursday, Wednesday. Bounce off, that's our support there, just under S2 at 28,700. 29,300 we trade at the moment, but we really want to get back to this 29,800 level. We're going to move up and test the top of that trend line and those closing highs here, that resistance through there. So key is R1 29,500 and R2 at 29,725. JM, I don't know what your views are on that, my friend. I don't understand that. A bit of Spanish spam, not like a bit of Spanish spam on NFP day. Naeem, dear sir, I'm from India. I want to know how gold breakout position. Gold, Naeem, on a roll. As we said earlier, I don't know if I've got gold here. Have I got gold on this particular setup? I have gold, but it's here on this set on a weekly basis. I don't know what this is trying to. I know what this was for. Gold, big move here. You can see this. Hope you can see that. This is different. setup. But this is, a big, you can see here a bit more clearly, you can see a nice strong channel forming for gold here. This is the daily this is a different setup, but yeah, it's continuing to move. Big move over the psychological 1800 yesterday through here. There's at 1800 level. So moving up, we look to the left on this chart. See, where's our next resistance? Well, we're into it, aren't we? 1850 is the next key resistance area here. That's a bit too high, but let's just put those in on this. Just on this very simple chart, you can see, big advocate for keeping things simple. But that's our 1850 level there. That's the key psychological 1800 level, which we've broken through yesterday. And you can see the trend remains sort of to the upside. It's channeled from this low. So we've had a good April. If we got the 20-day moving average on there, we've seen we've been above that all of April, and we started into May quite well as well. If I just put the period separators on this chart, you can see the different months. So strong from a double bottom here in March down around under 1700, around 1680, 1686. Big break over the March high, which was here at 1750, 1756, and you see how we come back to test it here into the end of April. But that has held, and we're out. I've just very crudely put that channel on, but you can see the trend remains to the upside, my friend. Hi, Gustav here. NASDAQ 100, 30 minutes to 1 hour. Certainly, Gustav. How are you, my friend? Hope you're well. What do you say? NASDAQ 100. Have I got NASDAQ 100 on here? I should have a NASDAQ 100 on here. This is I've got all sorts of different charts on here. Let's see if we can tidy it up a bit. Let's go to the default set. Right, this is the daily setup. All-time highs pushed into the end of April. Big move down, but the 50-day moving average, I'm going to come to your time frame in a minute, Gustav, but the 50-day moving average held quite well. So 1 hour on the NASDAQ on here. That's been long from yesterday. Over its 20-hour, came back down, bounced back up. So long, that's still long because you stopped. Wouldn't have taken you out there if you got in here, which you should have done. It's gone down, you've gone short. Might take you out shorter, but certainly as close as you're short, you've gone long here, gone against you, but you're still long, tested, and long. So the 1 hour, Gustav, has key resistance, which we've already tested above R2 today at 13,800. So 13,800 key cycle, a big round number, of course, as well. But that's where the 200-hour moving average is. It's tested that in NFP hour. The 20 period is your key support. So you've got support at 13,631. You then have R1 at 13,690. R2, which is where our resistance starts, at 1370. So we got resistance through here. I wish I could draw these little boxes on here. I could insert. Where's my triangles, shapes, rectangles? So we sort of got resistance through this area there. This is the 1 hour time frame, Gustav, you're saying. Our support sits, insert, sort of sits through here, really, as well on the 1 hour. And a lot of people say that's your 20 period and that's your 200 period. So that's your support zone there. So the 1 hour, so perhaps selling there down into there. If you're then asking about, what's it on 30 minute to 1 hour, let's go down to 30 minute. 30 minute there is a bit more incisive there. So that's your 30 minute, and there's R1 again. So that's still those two zones. So 30 minute R1 becomes the next play at 13,690 and R2 at 13,760. Remember, it's still earnings. We've had some very, very strong earnings, although NASDAQ is suffering a wee bit from the churn into financials did very well yesterday, and the churn into cyclical stocks, energy stocks have been doing well, oil companies. Anthony, I hope I answered that before. You've answered that. You asked that in Facebook. I hope you answered it before. It's to do with a strong Canadian dollar over the longer time frame, but both the dollar and the CAD have had poor jobs data today. So overall, they're sort of cancelling each other out. David, good afternoon to you, sir. Bank of England saying UK recovery faster than expected. Indeed, they have. Yesterday, said a lot of things yesterday. The data was a bit ropey yesterday. US recover slower than expected. Even new president 100 days. What's your general 3-month outlook thoughts, Stuart? David, what are you asking? Are you asking about? I'm not sure what you're asking about. Are you asking about the cable, or you're asking about the dollar or the UK? My own thoughts, for what it's worth, again, David, is that just put me up there. Markets. The other key thing, David, you look your picture. You look, you're not obviously you're a young man, if you don't mind me saying so. But markets tend to get ahead of themselves. So we got a bit too exuberant about this recovery in the United States, the recovery in the UK. Let's start with the UK. A lot of the buzz around the UK is that the sterling has been undervalued on a trade-weighted basis, which it is. It's still at relatively low levels because of the uncertainty about Brexit and all that agony over the last 5 and 6 years of the vote itself, the protracted negotiations with the EU, trade deals in place now. It's a bit of a mess. The fishermen, the firemen, and the fishermen, the farmers. Lots of complaints. We've had that silly spat with Jersey and the French yesterday. But economically, it's still a big hangover. But the other key thing, obviously from the UK's point of view, most of business is done on services, not done with trades, goods and manufacturing stuff. Although the UK still is a relatively big global manufacturer. I'm sure a lot of people wouldn't believe me, but still something like 7th or 8th biggest global manufacturer. There's still potential in the UK. The strong, what appears to be strong political support for Boris Johnson's government, love him or hate him, it just seems to be pushing through. The result in Hartlepool today was a big, not a big shock, but a huge surprise. Labour haven't played that very well. But so there's potential in the UK. So sterling could recover from here, and the FTSE 100 could recover from here, even though sterling is moving up. Remember, the FTSE 100, 70+% of the companies there earn most of their earnings from abroad in dollars, but a lot of the UK FTSE 100 companies are also cyclical type companies as well. So, big companies like BP and Shell. And so they will benefit from this recovery. However, is today's NFP number a question mark over that recovery? Well, one would argue it could be. Yes, absolutely. So typically the next 3 months, you're saying, David, May, June, July, they're typically quiet months for markets or quieter months for markets. Volumes go down. But it's a different year, isn't it? 2021, certainly to other years as it's recovery. So I'm fairly optimistic. The equity markets will continue to move up from here, I believe. Again, it doesn't really matter what I think. That will continue. And I think sterling could be a beneficiary from that as well. The amount of spending coming back to the President of the United States, the amount of spending that's scheduled is massive. The tax increases are very significant, but it's only going to affect a few at the top. And again, they'll have ways of hiding and shaving that tax. So whether the tax can be actually collected is another story altogether. But there's certainly, it's a big, you would argue, it's quite a socialist agenda in the United States. I know a lot of my American friends would go grey at the thought of that. But certainly, it seems to be a bit more, liberal type, European type, social type support approach from Biden and his crew than was even anticipated in his manifesto. So are they going to fix much more than fixing the roads and the bridges in the United States? So again, see where we go from here. So I'm generally optimistic. I think the dollar might start weakening again, and other currencies could accrue. CAD's had a real good run. Commodity currencies look like they're on a tear, and they've had a really good, strong first 4 months, and you can see that continuing for the future. But anyway, David, thank you for a very intelligent question. Thank you very much, my friend. I don't know what you think. What's your take on gold, says Sammy? Well, gold continues to move to the upside. It's had a big it weighed and it's a really good. Gold was a really good example. I've got it here. I didn't think I did, but it's a really good example. Oops, hang on a minute. Gold is a good example, Sammy, of waiting and seeing. This is a daily basis. I've just talked about this for somebody who asked before. I can't remember who it was. About commodities moving and gold wasn't. But if I just insert one of my favourite indicators, which is the 20-day moving average, the midline on the Bollinger Band. So we put in the Bollinger Band and make them, I don't know, let's make them bright blue on this one. Let's make them, what colour should we, aqua. Okay. As you can see, lines, that's the wrong, I shouldn't have done that. But anyway, you can see my trend lines, my Bollinger Bands are the same colour now. Let's change that. Okay, at least let's make it a different colour. There we go. Nice channel here. So it's had a strong April, although it wasn't very clear, was it? But as an end of day trader, this is the daily time frame. Zoom up a bit. You can see that the 20 period moving average has held. So the upper Bollinger Band is where we've been in play here. And once we broke 1750, which was our high for March, we continued to move up, top of the Bollinger Band, down to the middle Bollinger Band, but the 20-day moving average held again here into the end of the month. And then we've had a big break to the upside. So the 20-day moving average, the middle of the Bollinger Band has held. We've had those squeeze points on the Bollinger Band and expanding off we've gone. Another squeeze here at the end of the month. We had a big start to May and off we've gone. We've ran through the key 1800 where the 200-day exponential moving average was, not the 200-day simple moving average, but the 200-day exponential moving average here at around about 1796. We're over that. We're over the psychological 1800 itself and a strong follow-through day today. And 1850, the next one on the cards. We may cool from these two strong days. So gold, Sammy, remains bid to the upside. What's the potential target gold is aiming for? Well, it depends on what time frame you're trading, Emmanuel, and how you're trading this. If you're, let's go back to a different chart. Let's have a look at if you're an end of day trader, for instance, trading this crossing EMA strategy, which is lots of trend, very simple trend following analysis. If you're a beginner or even if you're a more sophisticated trader, but gold here, it's again the rules on this particular strategy would have taken you long when the moving averages cross here. It's got you got out there where it's gone under the 9. You've gone long again here on the 15th of April, and you've been long ever since. You then got out here on the 29th of April. You would have gone long here on the 1st of May, and you're still long. So you got long there around 1791. It's still bid. You again just trail your stop loss up. Stop losses should be around about here now under that 200-day. Again, it depends on the time frame you're trading, Emmanuel. But certainly R2's been tested today at 1840. That brings in the next psychological round number at 1850. We move up. So the question is, where do we go from here? Well, that's the daily. What's the weekly telling us? Well, the weekly's been strong. This week, as you can see, first week of May, this candle here, has taken us over the 20-day moving average into the upper half of the Bollinger Band. So, excuse me, that's a bit messy. You can see we've been moving down from these $2,000 levels at the beginning of the year. Sorry, beginning of the year, what I'm talking about. Middle of last year, July it was, wasn't it? And we've tracked lower here on the weekly, and that's been under that 20-day moving average there on a weekly basis here since November. So it's been moving down since November. We're into 1700, under 1700 at the end of March, and since the end of March, we've now recouped and recovered. And finally, we're back over the 20 period here for an end of week basis, and also a big strong week because we're testing the 50 period moving average on the weekly basis as well, which sticks us there around 1835. So it's below where we are at the moment. So that's very interesting, isn't it? One would say. So certainly a turnaround week for the gold market potentially as we move into as we complete the first week of May. So there we go. So what can I say? Well, I would say that it's recouping. If we look to the left, though, 1850. When we were last at 1850, well, we tested intraday 1850 all the way back in February, but we haven't closed the day above 1850 from the very first trading day in February. February the 1st, we closed the day over 1850. So it's a big resistance area, and we haven't been there for that's February, March, April. Here we are in May. So 3 months, 4 months high is where gold may be heading to. Veronica, good morning, good evening. I don't know where you are, Veronica, but good morning, good evening to you, wherever you are. What do you think is potential target for gold is aiming for? Emmanuel, you asked that, you've asked that twice, or I'll just put you no, I'll just put it on twice, sorry. Okay, right, I'm going to have a sip of water. There's no more new questions. Let me just go and check my friends on Facebook, see what they've got to say. Let's have a look. Sure, it's the same question, so I think I may have. Let's have a quick refresh. So nobody on Facebook, is that the problem? Everyone's on. 16 comments, it says. I can't see them. Let's have a look at them all. Spam. And Adi was the last, in fact, the last comment. Okay, right, so let's go back to, we've had a look at AUDCAD, David, Emmanuel. Right, I think we're done. There's no more questions on there. Looks of things. Where are we? Okay, right, let's have a quick recap then for our close for the day. Let's go back to euro. So euro, we went to 121. Let's have a look. Where did we go? Our high today has been 121.45. So 121.45, $45 north of 121, following the NFP. So let's recap the data that's moved the markets this morning in the United States, or this afternoon, or the evening, wherever you are in the world. We've had a big miss for the headline NFP number. Non-farm payrolls for April came in at 266,000. Market expectations were 980,000. Lots of talking about a million. Jeffries had put in a 2.1 million number. Big miss there. Last month was also downgraded nearly 140,000, from 916,000 to 770,000. Earnings, on the other hand, beat expectations. So there's a clear dichotomy here. We've got the number of jobs being created shrinking, but the number of people in work getting paid more. So 0.3 of 1% for the hourly earnings on a annualized basis. And on a monthly basis, they were up twice that, 0.7 of 1%. So big rise for April, month-on-month earnings. Participation rates ticked up to 0.2 of one tick at 61.7%. So more people may be coming back into the marketplace in the United States. Interestingly, the U6 unemployment, which is a wider measure of unemployment, and many economists, particularly labour economists, look at it as a more significant number. It remains over the key 10%. It didn't move down as much as many were expecting. It's sat at 10.4%, down from 10.7%, but still above the big psychological 10% number. And the more popular number has gone back over 6%, 6.1%. So unemployment missed its 5.8% target relatively significantly. But the big thing that's grabbing all the headlines is that big miss for the number of new jobs created in April. It's coming at 266,000, down from expectations of 980,000. That's a big miss. There's some detail in there that needs investigating. I'm going to go off and have a look at that now. It's just one of those things. Don't get too het up about these things. Economists, markets, participants, experts, people much brighter than I am, get things wrong all the time. It's just part of the market. Markets go up, markets go down. That's what happens, I'm afraid, my friends. It's good when we're up. As somebody was saying before, he was long gold and euro. I think it was a chap. I can't remember if it was a chap or a lady. Others perhaps have been caught out and got caught the other way. Right, Nain, should we... Final question. before I go. Should we bother taking a gamble on a retracement, or bother or not, or don't bother and just hold until 1850 and further? Nayan, you should have a system. Don't use the word gamble for a start, because that by default will infuse your subconscious and your memory. So if you're actually writing that down, you've keyed that into your keyboard, whether it's on your laptop or on your phone. So suggests to me that that's perhaps you're a bit of a risky type. So be careful about using that sort of word, and also have a system. Your system should tell you what to do. As I say, depending on how you're trading it, but let's just go back to the finish with gold. Every time the end of day basis, gold remains strong and bid, and you're just following the trend. The 4-hour basis is strong and bid and moving up, and the 1-hour basis is strong and bid and moving up. It's run out of steam there at R2, certainly at 1840, 1841, and moved back down. It's still supported at the moment at R1, but that looks like a bit weak potentially, depending on your time frame now, my friend. But you should have a system to tell you what to do. This strategy here, let's go back to the lower time frames then. We go back to the 5-minute time frame. Well, he went long, then he went short, and he's just about gone short 5-minute on gold. But it's very, very choppy, as you can see. So the 5-minute using this strategy is obviously a bit crazy as that move. But he went short there. Target would have been down there somewhere. But have a system, trade your system, okay? Right, everybody's talking about gold. So kick, say hello. That's an interesting, isn't it? Kicker, say hello. What do you think about 1872 resistance? Again, depends on your time frame, my friend. 1872, yeah, that's close enough, really. R3 today, kicker, is at 1863. 1872, you're talking about, takes you to there. That's a very key area. That takes you back. Can you see that? I hope you can see that, kicker. Takes us all the way back to the end of January and those fractal highs. I don't know if you can see that. If I zoom that up, you'll lose it. Yeah. Can you see those fractal highs there? That's that 1872 area. So that's a key resistance as well, my friend. So yeah, so it's not out of the question, because R3 today sits at 1862, and then your 1872. Sorry, let me say that again. Let me say that a bit more slowly. 1863 is where R3 sits today. But that, your 1872 you're talking about, kicker, takes you all the way back to these two fractal highs here we had all the way back at the end of January. So it's a key area, my friend. Okay, I'm going to wrap it up, guys, because my voice is going, and I've sat still for an hour, which is not like me. I'm getting a bit of a backache here. So take care, everyone. Have a great weekend. Trend and trade carefully. May the trend be with you, as I always say, and may the pips be with you. I hope you've all had a great NFP day. Big surprise, but that's what happens in the market. So take care, everyone, and we'll shall see you soon. All the best, everyone, and take care.